Hey guys, Mike here. So obviously Papa Jerome Powell spoke today and the markets, kind of got to hear some things. It may have been confusing actually or something he said, which I think confused a lot of people about how restrictive things are. And I'm actually going to show you that. If you're a member, you won't be surprised by this at all. I'll show it to you Monday through Friday. And so I think that confused a lot of people. Then I'll get to show you some of the damage these rate hikes are actually doing, which I expected actually this to continue to get worse, this certain stat here. And then, of course, I'm going to go into more important when you want to see this. The pattern I showed you like a few months ago when you own tech stocks and garbage stocks. Well, a lot of you have been asking about a different type of stock, like travel stocks, things like that. And I'm going to show you firsthand how to do it, what you can do to prove to you that, this is what's happening. This is what's been working, okay? And then I'll show you also, because I think there's confusion on like sector rotation. I'll show you exactly what's being rotated into and kind of explain that a little more. So I think I get a lot of questions on that. But first we'll start with Jerome Powell, what he said and what he didn't say real quick. And so he did say, obviously, likely more restrictive coming. Labor markets are still too strong. But he did not say this, that there will be 25 basis point hikes over the next two meetings. He said there could be more rate hikes over the next two meetings. And so just keep that in mind. I expected him to say something like that. But what he's talking about when he said, conditions have actually, they're not, he keeps saying, well, they're not really as tight as people think they are. And that's actually true, because in October, what happened? Whether you look at Goldman Sachs, Bloomberg, the Chicago Fed, conditions loosen, right? What happened in March? When the conditions loosen. And when the conditions loosen, obviously you see the market rallying and stuff. And of course, I like to use the one right here, which I update every Monday. But then on this one, we get this every Wednesday. And so this tells you whether the financial conditions are loosening or tightening. And we got this today. Ooh, look at that. And financial conditions are actually loosening, right? Still. And so when it's going up, it's tightening. When it's coming down, it's loosening. Now, looking at the Fed watch here, what are they expecting in July, right? Long way off. Well, now we're at 82%. And so the real question is, if we're really up there percentage on this, will they go ahead and do the rate hike since the market is expecting it? Again, we're a long way off from this, okay? Remember, there is no August meeting. So you're going to have a big gap between July and September, just FYI, which, again, makes no sense why they skipped June if they were going to do that, okay? Now, what's happening more? Bankruptcies. Of course, every time I told you I get this, I'll let you know. Here's the weekly bankruptcy filings, 4-week moving average, and the 12-week moving average. You can see, obviously, they're both moving up. This shouldn't be a surprise, right? Will we reach 2020 and 08 levels? We'll have to see. But again, remember, in 2020, you had a lot of garbage companies that were created to have no business being in business, okay? They take out a lot of debt, and now you're going from 0% to like a 7% debt, probably higher because they're much more risky, right? And of course, they're going to go out of business. That's just the way it is. So remember, the strong will survive. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And they call these companies zombie companies. A lot of them were SPACs, things like that. And so a lot of them will be gone to the wayside, all right? And of course, in an environment like this, you won't see a whole lot of startups because it's a lot of money, right? And I'm talking, when I say like company starting up, I don't mean like going on Wall Street. I mean like literally actually starting from scratch and hiring and doing all this stuff, because it takes capital to do that, right? And right now, capital is expensive and banks have tighter lending standards, right? And so just keep that in mind. Even the regional banks come out and said, hey, and they're the ones doing a lot of lending to companies if you want to start a company. So, if you keep tightening or you keep holding them up there for a long period of time, there's going to be problems. That's why, Janet Yellen said, yeah, we know. You guys will go out of business, somebody else will buy you, right? So they kind of know that's coming down the road, if that's the plan. Now, that leads me into sector rotation, travel stocks, some of you asked about. And you can see, these travel stocks, especially the cruise lines the last few days, been ripping and roaring. Airlines been ripping for quite a while now, for a couple months and everything. And what I want to do first, before I get into the chart part, this pattern I'm going to show you, and you can do it yourself, is listen to, guess what? The CEO of Delta came out yesterday, and this guy looks so giddy, it is insane. And guess what? If I was getting his bonuses for all, as much as that stock's been going up, I would be happy too, okay? But listen to what he says about the consumer who buys their tickets, and then what really surprised me was how far out he thinks this thing is going to go, which I don't believe for a second.
And the demand, as you know, as anyone that's traveling knows, is off the chains. And it doesn't matter whether it's in the U.S., whether it's in Europe, whether it's in Asia. People are wanting to travel, and they're prioritizing travel. And as a result, the demand that we're seeing today is even stronger, and the value is even greater than we're seeing. We're raising not only the full year, we're raising the second quarter. I think the second quarter is going to be our highest Q2 earnings in our history, coming just 3 years after the start of the pandemic, which is pretty incredible. And the other data point that we'll be sharing today is that we're putting a new marker out there to generate $10 billion of free cash between now and 25 as a result of the continuous strength, because we think we're in a multi-year recovery.
You think this continues for some period of time?
There's no signs of any let up, and I'll give you a couple of data points. In our industry, 75% of the revenues, we all talk about the consumer and the health of the consumer and wondering about cracks in the consumer, and we get that. 75% of our revenues come from consumers that are in the top 40% of earnings. Households making $100,000 or more make up 75% of our revenue base. As an industry, at Delta, arguably, it's even higher than that. The wealth that cohort has accumulated just since 2019 is over $25 trillion. They have the wealth. And we talk about excess savings in terms of incremental cash savings. That number is still well over $1 trillion for that cohort. So that's very strong. The second thing I want to mention real quickly is we talked about the shift between goods and services starting to return. We're still in the middle innings. I'm going to show some charts about that. We're still in the middle innings of the shift. So I think this is going to take several years before it eventually starts to normalize.
And so let me know what you think about that down there in the bottom. This is what we've been talking about, right? You hear it from him. I mean, I got our neighbors' friends who are going to have dinner with tonight. They're going on a cruise to Alaska, right? With another couple we know. Okay, other neighbors down the street, they're going to Italy. You know, people are traveling, right? People that make X amount of dollars above, you know, are traveling. That's just the way it is. What we're spending it on. Okay, and so, you know, how far that's going to go, I don't know. I don't see 3 years, but I mean, who knows? But yeah, that's CEO talk right there as far as I'm concerned. Let me know what you think down at the bottom. Now, I sped this up 4x so you could see this. I really went through those stocks you just saw and put this pattern on there for you. And you can see it works like a charm. It worked on tech. It worked on garbage stocks. You draw the trend line down, get enough touching points. It breaks it, retests it, goes up. And then you got this rounding bottom formation, which seems to be taking place, right? I mean, that's just the way it is. As you can see, once again, right there on Norwegian Cruise Lines. You see Delta, obviously, bam. You know, same thing happening here. Nice retest on that one before it bounces. And then, of course, the rounding bottom, or whatever term you like to use and stuff. You know, you look at Southwest, though. Southwest really, if it is going to have to break out, just broke out. I don't see the retest yet on that. But again, United Airlines barely even dropped since 2021 when you look at compare to the rest of them. And so, again, nice retest on that trend line. And then that leads me into rotation, okay? So rotation, you can see right here in June what's been rotated into, right? You got your transportation, XLY, your industrials, XLC, and you can see at the bottom what people don't like, utilities, financials, that kind of stuff. And then, of course, you come over here, especially starting June 20th, you can really see utilities start taking a hit, financials, and the reason why is probably most likely the interest rates, even though they are beat down. And then you can see, though, once again, transportation and industrials especially, these are skewed because both of them have the airlines in there, okay? That's a key thing to keep in mind. And like cruise line stocks, as far as I can say, are in none of those ETFs and stuff like that. But you're seeing money move in there. And before I show you something else, you know, understand when I say rotation, it's not like they're going out and just selling all their Apple stock or their, which you're going to see in just a second, why. Tesla or any of the rest of these big ones. It's just understand every hedge fund usually has like a percentage that each stock can make up. So they may say, well, I don't want Nvidia to make up more than 10%. Of course, Nvidia's been ripping. So, of course, when it hits 10%, they have to sell and then take that money and they're going to rotate it into something else. They may buy Meta. They may buy Google. They may go out and buy airlines, banks, whatever. You know, and that's what happens, right? And then especially now we're coming to quarter end. You're seeing, that's why you're seeing it June 20th, that pop. They're trying to, you know, you have window dressing where they're trying to make everything look good, but also the fact they really do have to rotate because some of these stocks are way up. And so they may be setting up the next quarter for something else, right? And so that's what you're seeing, okay? Just, you know, keep that in mind. Now, if you're big into travel, like you really think travel is going to be, all this stocks are going to be booming and stuff over the next 6 months, year, whatever it is, there are plenty of ETFs like that. I did find one called Cruise, CRUZ. I'm not endorsing this or anything else. I'm just putting it out there to you because this is, you know, one has all the ones you would like then. Delta, Marriott, Hilton, Carnival, Royal Caribbean, United Airlines, anything to do with travel. So, you know, again, there's others out there too you can look at, but if you're into that, and when you look at the chart, same pattern, right? Trend line down, bang, breaks, retests, and takes off. Okay, so it's following the same as all the other stocks because that's the stocks that are in it. All right, so it should make sense and stuff. Again, I'm not endorsing that. It's not financial advice. Do your homework, please. But if you think travel's in there, find you an ETF and see what you can do with it. Now, Apple, and this is what I'm talking about, big money not selling Apple, all-time new high again. I think this is like 4 or 5 just this month. And so understand, again, this is approaching 3 billion. It makes up the biggest weight ever in history of the SPY now, almost 8% by itself. You can see on the weekly, overbought, MACD's super extended, but this is a safe haven. It's like a value stock to these big companies. That's why they have it in more than any ETF, and that's why I tell you how that market goes, or how Apple goes, the market goes. That's just the way it is. Now, Nvidia obviously tanked after hours in the morning, right at open, hit this little spot right here, which we'll talk about in a minute. And that's because the U.S. came out and said, well, we might be more restrictive on AI chip exports to China, which would affect Nvidia AMD. But don't worry, once we hit that level right there, look at that recovery. Going from 396 to 418 in a matter of like 3 hours. And of course, this level is important because if we scroll back over it, it's just a big demand area, whether you want to call it an order block, whatever you want to call it. But anyway, when you look at this and you scroll to the left, you can see this area has been support, resistance, all that good stuff. There's a lot of people that will buy this area, and especially once it goes oversold in the morning like it did, bam, away we go, right? Big money stepped in, dip buyer stepped in, bought it up. Tesla, of course, I think I said this the other day, but just in case I didn't say this, obviously the 50 and the 200 crossing is actually a bullish thing for this stock. It ain't happened in a long time, just FYI. And so, when you look at this, what did I tell you guys yesterday? Look at those volume gaps. They can move up very quickly through this volume gap. That's exactly what it did. It sat here and moved right on up. Sat there at that volume nose where it hit the resistance around 258-ish. And then, of course, what does it need to do? If it gets above that, well, obviously, you can go through that next volume gap right there at around 262, I think. You can see, but you don't want to drop back down because it's going to end up moving that down very quickly. That's what happens when you have a stock that moves like Tesla does, right? That's why you get these big moves of $7, $8, $10, $20, type deal, and anywhere from like 3 to 6%. So again, on the daily, you want to get above, what was that, 257, and then see if it can run like 262, 263. If it falls down below, watch out below, right? Now, let me know if you've seen any of these ads. They started running ads, and they're Google ads, right? Supposedly, if you're in the EU, let us know. That's where they're putting most of these ads at. But, I guess they do have a few in America. We'll have to see. You can see them right there. People are putting this out and saying, hey, they're running ads and stuff. So we'll have to see if that's the case. Again, I think we get deliveries out on Sunday. That's always fun to see for Tesla. But, we'll see if it's a sell the news event or not. And then we have earnings, and I believe I was one day ahead on this. I apologize. Micron was actually today, not yesterday, and then Nike and Paycheck will be tomorrow. I'm just listening to Paycheck just because I want to see, because obviously they'll be able to tell us a little bit about the labor market. But more importantly, I want Nike because I want to hear about China, because I don't hear any good news coming out of China. And so I just want to see, are people over there saving, buying the swish, what's going on? So that's a big one to watch out for. And then, of course, the only thing you need to know about tomorrow is Fed Chair Powell speaks again at 2:30 in the afternoon this time, and not the morning, okay? And so you might see some tomfoolery tomorrow with the market, right? All over the place. We'll see. This will happen last week when he spoke. One day it was green, the next day it was red, or flip-flop it, however you want to do it. But, we'll see what he has to say. Again, I believe there's an algo program for things that man says. So the day when somebody put that out there, they said, oh, 2 more rate hikes coming in a row, whatever it was, and the market went red on it or whatever, did a big drop, and then it recovered. And so that's the kind of stuff you're going to see. But again, just pay attention. And again, if you're looking, pull those charts up, pull those ETFs up to start learning sector rotation. It'll help you out in the future, I promise, okay? And so hopefully you got something out of it, guys. I really appreciate you watching. Hit that like and subscribe button. Think I'll sign up for the membership if you want to. And I will see you guys tomorrow.